Welcome back, everyone. In today's video, we are going to initiate coverage on Alibaba stock, ticker symbol BABA. They trade off the New York Stock Exchange, and as I'm shooting this video, they are trading at $170.04. Now, if this is your first time tuning in, my name is Jeff. We do weekly stock analysis, we do monthly stock picks, and we also discuss financial training. So go ahead and subscribe now so you don't miss any content. Now, a little bit about Alibaba, guys, is that they were founded in 1999 by CEO Jack Ma, and he is still about an 8% owner of the company. And this is a Chinese e-commerce, retail, and technology conglomerate. This company is absolutely huge, but their main business stream and their core business is based around wholesale. So a lot of the stuff you're getting from Amazon and eBay, and Shopify, all these other big websites, it's coming from an Alibaba merchant. That's where the deal was struck originally. This company is massively huge. Like I said, we can take a look here quick at the market cap and see how it compares to Apple and Google and Amazon and Facebook. Is that this is the 6th largest company in the world by market cap. So now, to put how diverse and how big Alibaba is into some kind of perspective for you, is that this chart here, over here on the left, this is a list of all these subsidiaries that Alibaba owns and kind of what their function is, and then how they would translate to maybe what we're used to in America here. And so, as you can see, they are involved with so many things. You know, Alipay, I'm familiar with that. That's your online payments. That would be similar to PayPal. They offer cloud services, mobile apps, mobile OS, maps and navigation, retail outlets, group buying, cloud storage, mobile messaging, car service ride sharing, customer e-commerce, online travel booking, business to customer e-commerce, e-learning, microblogging, music streaming, streaming video, and money market funds. And so, you know, maybe just to simplify a bit, this would be like taking elements of PayPal, Amazon, Google Play, and all these huge companies and rolling them into one. That is how big Alibaba is. All right, let's take a look at some of the fundamentals here, guys. Alibaba is trading at about $172 a share now. It's up pretty good today. Now let's look at their valuation metrics. The market cap is about a $439.76 billion market cap. That is ridiculous, guys. Their trailing PE is about a 48.43. It's a little high, but just keep in mind this is a growth company. Their forward PE is 26.13. That's a whole lot better. And their 52-week high is 191.75. That was just a couple of days ago until all the big tech companies pulled back. Their 52-week low is at 86.01. You know, this company has run 86.9% on the year, which is fantastic. And moving down here towards the Sherriff Statistics, this is the part where I really start paying attention for long-term positions, but has $2.57 billion shares outstanding, and only 1.34.58 million are short. So it's less than 1%. Now this short percent of float is going to show 0%, but it's less than 1%, and very, very solid fundamentally. Their income revenue is around $29 billion. You know, their gross profit margin is a $14.33 billion. Everything on their balance sheet, their total cash flow is about $24 billion. And they have $13.82 billion of debt. But very, very fundamentally solid. They do not pay a dividend. Unfortunately, they do not pay a dividend. Maybe sometime in the future they will do that, but for now they don't. Alright, guys, this is the 5-year chart on Alibaba. Now, they IPO'd back here in September of 2014. I remember all the big interest and all the Wall Street pressure was on this company when they IPO'd, and they had a quick run up to about $120. I remember it like it was yesterday. And then from here, moving into early 2016, the Chinese economy took a recession and pulled back quite a bit here in two different times. It looks like they got down to a low of $58 and a low of about $60. I bought into Alibaba around the $77 range, and then I made a second buy-in around the $90 range, and up here a little closer in 2016. And this has been a fantastic investment so far, and I have no plans of selling anytime soon. Here's the 1-year chart right here. This will give you a little bit more of a more current background on the company, is that it has done nothing but grow for the past year. During that economic recession in China, that Alibaba was buying out acquiring all kinds of companies, you know, where the market caps got down real cheap and low on a lot of these companies. They started buying into everything, and this past year has been a total benefactor from that. You know, they have just grown. I remember this here back in June. They went from $125, and overnight they jumped up to about $143 on a revenue increase. And use these little dips to your advantage, guys. We're actually in the middle of one right now. We are, you know, they got up to about $191 here about 2 weeks ago, and then right now they're pulled back to about 168, 169. Looks like they're at 171 now. But you know, definitely use these advantages. I mean, these dips to your advantages. These are good opportunities to get involved with these stocks, you know. And it might fall a little further, but you know, definitely don't buy on top of the hills. You know, buy down here in the dips. And we got a good one going right now. Here is a quick look at the last 4 earnings reports, guys. Is that in Q4 of 2016, they had a good beat there. And then, you know, right here, down here, Q1 of 2017, that was more of a residual effect from the Chinese market pulling back. They did have a small miss that quarter, but now you can see, you know, guidance went way up in Q2. They beat in Q3 huge. They beat by $1.29. That was this last one we just had a couple weeks ago, and then guidance got raised again for a third time to $1.60. So they are kicking tail on earnings reports, and you know, like I said, again, the Q1 here for 2017, you know, that was directly related to the recession in the Chinese market. Now, if you're not familiar with what Singles Day is, that would be the Chinese equivalent to Black Friday or Cyber Monday, and it's actually the world's biggest shopping event now. In this past year, just a few weeks ago, guys, they made $25.4 billion of sales on Singles Day. So it's 11/11 every year. They started the shopping festival in 2009, and every year they break their own sales record. I can't really wait to see what they'll do next year. So, based on the fundamentals, based on their diversity, based on all the investments they've made, and based on all the investments they will continue to make, I'm going to rate Alibaba as a strong buy. And we are in the middle of a small dip right now. I encourage you to take advantage of that. And what it is, guys, I don't see this company having any problem getting to $1 trillion market cap and beyond. I could see them being $500 to $700 a share in the next 3 to 5 years. And this is a position you could take, a large position you could take in your portfolio and really build your portfolio around this company. And I'm very, very bullish on Alibaba, and I'm calling it a strong buy. Guys, if you found this video useful, please drop me a like, leave me some comments, and don't forget to subscribe. Thank you for taking the time to watch my video, and have an excellent day.